After the successful completion of the inaugural session, we are moving ahead with the technical session 1. For that, we have very learned speaker, Senior Advocate Saurabh Soparkar sir with us. I'll request Chairman Ahmedabad Branch CA Bishan sir and Managing Committee Member CA Sunil Sanghvi sir to please welcome Saurabh Soparkar sir with a diary, case and memento. I'll request Pritesh Bhai and Riken Bhai from Jamnagar and Baroda branch to please join Team Ahmedabad in welcoming the faculty for technical session 1. So Ahmedabad branch does not require Saurabh Soparkar sir to be introduced, and the tradition which we have learned from the World Congress, we are skipping that part. I'll straight away request sir to please take it further from here. Thank you, sir.
Good morning, everyone. I was told to give my biodata for introduction. I said that if by now those who don't know me, I'm not worth to be known, and rest who know me don't know be told again. So let's not spend time on introduction. Mr. President, sir, my distinguished co-speaker, Shri Girish Ahuja ji, friends. It's a pleasure to be here this morning to discuss interesting, challenging, and at the same time, a disturbing or two disturbing judgments of the Supreme Court on the issue of charitable trust. Supreme Court delivers judgments interpreting law, but of the many judgments that the Supreme Court would deliver, there are judgments which in a way change the course of history. They are landmark judgments, and they are the defining moments in the matter of interpretation of law. They are not necessarily judgments in favor of the SSEs. And in fact, I would believe that we need to be more careful in examining judgments which are against the SSEs, because unless we study them, we are likely to fall in the trap, if I can use that phrase, or the problem that is envisaged under the judgments of the Supreme Court. With this background, let me start with the judgments of the Supreme Court. There are two in number. One in relation to Section 2, Clause 15, charitable institutions in general, that is in the matter of AUDA. And second, in relation to Section 1023C, New Noble Educational Institution. The second judgment, I would not be spending too much of time because it is under 1023C, may not apply to a large number of SSEs. I would certainly deal with that, but I would be devoting significant amount of time in dealing with the first judgment in the matter of Ahmedabad Urban Development Authority. The Vice President, before he left the days, indicated to me that though I have started late, I should be taking 1 hour as was promised. So I would, it's 10:25, I'll speak up to 11:25. He said that he will appropriately arrange the tea time. So I would go accordingly. Let me now go to the issue proper. Section 2, Clause 15 defines charitable purpose. Prior to the amendment in the year 2008, the term charitable purpose was defined as it includes relief to poor, education, medical relief, and advancement of general public utility. The fourth category, advancement of general public utility, which is a residuary category, is the subject matter of discussion here. In between, couple of more items have been added, yoga, environment, etc., but we are not going there. Please also mark, as I said, the judgment, the controversy, the limitations and the problems that we intend to discuss, they all pertain to the last or the residuary category. And for the earlier categories, education, medical relief, etc., etc., they are not governed by this judgment. Now, what was the controversy? Prior to 2008, the law as understood by the Supreme Court was Surat Art, Silk Mill, Lok Shikshan Trust, Thanti Trust, all those judgments, the law as was understood was that so long as your predominant object is a charitable object, you are entitled to the benefit of exemption from your income. The incidental activity, incidental object, an activity which feeds to the main object has nothing to do with your status of a charitable institution. If a charitable institution, for the purpose of funding its activities, let us say calls a film star, has a star night, sells tickets, earns rupees 50 lakh, but so long as those rupees 50 lakhs are utilized for the purpose of charitable activities, you are still entitled to the benefit of a charity. In other words, the focus was on the predominant object, and the way in which you have supported the object, you have financed the object, was completely irrelevant. Time and again, Supreme Court was called upon to decide as to whether in the process of achieving this object, if a trust carries on activity which is in the nature of business or which borders on being in the nature of business, would the business or a quasi-business activity would disentitle the SSC from claiming the status of charity. Supreme Court repeatedly said what is material is, what is the predominant object, and the fact that for the purpose of achieving that object, if SSC incidentally engages itself into activities which would entitle it to raise funds for the purpose of carrying out charitable activity, should not be a bar against claiming the status of charity. Thus far, no problem. Then comes amendment to section 2, clause 15 in the year 2008, effective from assessment year 9-10. And this was the subject matter of controversy. A proviso is sought to be introduced in section 215, which is in two parts. It says, provided that advancement of any other object of general public utility shall not be a charitable purpose. So, disqualification. If, number one, it involves carrying on of any activity in the nature of trade, commerce or business, or any activity of rendering any service in relation to trade, commerce or business for a cess or fee or any other consideration, irrespective of the nature of use or application or retention of the income of such activity. In other words, now if a charitable institution falling in the residuary category, any other charity, general public utility, if that category charitable institution engages itself into business, trade or commerce, or carries on any activity in the nature of trade, commerce or business for a cess, fee or consideration, it would be ineligible to claim the benefit of section 2, clause 15. And that is irrespective of the fact as to whether or not the funds are utilized for the charitable object, you are still not being entitled to the benefit. The proviso as it stood was too harsh. Second proviso was later on added up to rupees 10 lakh. The permission was granted to have business income raised to 25 lakh, 2015 raised to 20%. We'll come to that little later. Question is, when do you say that a charitable trust engages itself into trade, commerce, or business? Now, before the Supreme Court of India, a large number of matters got clubbed. This has some relevance, that was I'm saying. Broadly, there were 6 categories of matters, because when we see those categories and the judgments under respective categories, you will immediately see why am I drawing this distinction. First category was statutory corporations like GIDC, AUDA, housing boards, which are all government corporations established under state or a central statute to carry out one or another governmental function of development. Second was statutory regulating bodies, the bodies which are under the law set up for the purpose of regulating something. In fact, Institute of Chartered Accountants of India was also an appellant in this matter, because that was also denied the benefit of a charity. The third was trade promotion councils, the councils or associations which are set up for the purpose of helping trade, commerce, or business. Non-statutory bodies set up by government for the purpose of helping the trade or otherwise. Fifth was cricket associations. And sixth was the trusts or private trusts as we ordinarily understand. The judgment spells out different tests for different people, and therefore we will have to find out where do we fall and which test would be applicable to us, and that is why this classification assumes importance. Having said this, let me go to a couple of issues at appropriate places which are not directly relevant to the matter, but again would have a far-reaching effect. The first, when this amendment was introduced, immediately thereafter, the Honorable Finance Minister made a speech on the floor of Parliament saying that this amendment of taxing charitable trusts is not meant to hit genuine charities. Those which are carrying out charitable activities genuinely will not be hit by this, and we would come up with an appropriate circular clarifying this position. Based on that, a circular came to be issued, originally 11 of 2008, later on 1 of 2009, which expressly uses this sentence. This sentence has some bearing. The circular said, only those institutions who are wearing the mask of charity but are not really charitable in nature and are carrying out activity for profit would be held. In other words, genuine charitable institutions would not be hit. Now, if you look at the judgments of the high courts from which matters went to Supreme Court, one of the strong arguments of the SSCs before the high courts, which was accepted by the high courts, was look at the circular. Circular very clearly says it seeks to attack non-genuine charities. So if I am carrying out charitable activities genuinely and incidentally I am also having business activity, or incidentally I am having activities which you treat it as akin to business or helping trade, commerce, or business, I should not be hit. Or if I am recovering fees or cess in my developmental activity, ultimately I am doing it as and by way of my obligation to be a developing authority, and therefore that fee or cess should not result into disqualification. High courts had taken a view that yes, circular clearly protects these kinds of assesses. Genuine charities are not to be affected. Before the Honorable Supreme Court, therefore, the question of the binding effect of circular was being raised by the assesses repeatedly. That look, this is how CBDT has viewed the matter, and therefore genuine charities, if it's carrying out genuine work, please keep them out of this particular disqualification. Namnital Javed judgment of Supreme Court Constitutional Bench was cited that a circular, even if it is contrary to law, if it is issued by the board, will bind the board. UCO Bank was cited, KP Varghese was cited, Azadi Bachao Andolan was cited, and last, Vatika Township was also cited, all taking a view that circular, even if it is contrary to law, will bind the revenue, and revenue cannot take up a contrary position. The revenue relied upon a judgment of Constitution Bench of Ratan Melting, which was in indirect taxes under the excise law, where the language is also not akin to section 119 of Income Tax Act, and claimed that a circular contrary to law will not bind the revenue, and revenue can take up a position even contrary to circular. The Supreme Court holds, and this is first disturbing fact, that though Ratan Melting was not, at the time when Ratan Melting was being decided, Namdidlal Javeri was not cited, which is again a Constitutional Bench judgment, and Vatika Township is a later Constitutional Bench judgment. Supreme Court says that circular which is contrary to law will not bind the revenue. If circular advances proposition which is contrary to the framework of statutory provision, it will not bind the revenue. Now, this is the judgment by 3 learned judges. They are bound by the judgment of 5 learned judges. And yet, they choose to take a view diametrically opposite from the view taken by 5 learned judges. And the problem is therefore now, hitherto we were always saying, if there is a circular in favor of SSE, matter gets concluded, revenue cannot argue to the contrary, and SSE must get the protection. Now we are having one more Pandora's box opened. Revenue would always argue, if the circular is against its interest, that such circular is illegal because it is contrary to what the statutory provision is. And therefore, the court will have to examine whether it is contrary to statutory provision or not. Now, why this is completely, in my view, inappropriate? Because if it is contrary to law, in any case, SS is entitled to take the position of law. You would rely on circular only if you find that circular reduces rigors of the statutory provision. It gives you some concession or benefit which may not be envisaged by the statutory framework. That is why you were using circular. But now you are not permitted to do so. So the first offshoot of this judgment is reliance by the SSEs on the circulars as being binding on the revenue. That position is significantly watered down. Having said this, the court proceeds further. The court says we will have to interpret this clause, this amendment of 2008, looking into the subsequent amendments. Again, slightly interesting way of interpretation. I always thought when the court interprets a statutory provision, it looks at the provision as it stands. And it looks at historical background for the purpose of bringing the amendment. It will not look into the subsequent amendments unless they are amending the main provision to say, but this is the meaning of the provision because subsequent amendments clarify, be that as it may. The court then takes a view as to whether, one of the major arguments before the court was, when you say trade, commerce or business, or when you say fees, consideration or cess, do you mean any activity in the nature of business, or do you mean an activity motivated by profit? This was a very major bone of contention. The court says first, this prohibition is absolute. A charitable institution shall not carry out any trade, commerce, or business. 2, if at all it carries out trade, commerce, or business, it has to be incidental to achievement of its main object. And 3, if it has to carry out trade, commerce, or business, it must maintain separate books of account. And 4, the total receipts from trade, commerce, or business should not exceed rupees 10 lakh initially, up to 2012, 25 lakh from 2012 to 2016, and 20% of receipt thereafter. Now we will have to process each of these 4 limbs step by step. Now, Supreme Court clears one aspect of the matter, that you may not be carrying out actual trade, commerce, or business. But even if you are carrying out activity in the nature of trade, commerce, or business, for cess, fee, or consideration, you are hit. So it is not as if only if you have a GST license and you are actually selling the goods or selling the services. Even if you are not as dealer or a businessman carrying out any activity, but if you are rendering some services or incidentally selling some goods with a desire to make some money, you will be hit. So let's take the example that I took at the beginning. A charitable institution wants to raise rupees 50 lakh for the purpose of putting up a hospital or for the putting up a library. How do you raise rupees 50 lakh? To expect people to put in and give you donation may or may not really be realistic. So it calls a famous singer, arranges a concert, sells tickets, raises funds. Hitherto it was permissible. Now this will be regarded as in the nature of business or activity, which is a business because you are selling tickets, raising funds, making money, and therefore this will be hit. In order that the activity has to be incidental in nature, what is necessary is it must be connected to your main activity. The court is therefore saying, take an example again, that there is a hostel for the students. Now if hostel for the student is also running obviously a mess for the purpose of giving meals to the students. Now that activity of running a mess will not be regarded as business. But if in that mess, third parties are permitted to have food for a price, that is not incidental to your main activity. Because your main activity, according to this judgment, is hostel and therefore a mess for the students. But if the mess caters to third parties, that part of activity would be regarded as in the nature of business. So what is required to be seen is what is incidental to your main activity. The court therefore looks into issues topic-wise. And court gives some examples, and we will have to go to those examples to understand the problems. The court says, take a case of Gandhi Peace Foundation. If Gandhi Peace Foundation, which is essentially a charitable institution which disseminates knowledge in relation to Mahatma Gandhi, philosophy of Mahatma Gandhi, through museums, exhibition, publishing its work, That's a charitable institution. But if the very same institution publishes a coffee book on the life of Gandhi and sells at a significant profit or a substantial amount, that is business. Now look at the problems. Court says if it sells coffee book at a charge which is a substantial amount over the cost it incurs. What is the meaning of substantial? 5%, 10%, 20%, 50%? So, if the SSA believes that I have had no such markup, according to me, the price at which I am selling the book is commensurate with my cost, but revenue believes that it is at a substantially high price, it becomes business. Problem 2. Court says 11.4a requires you to maintain separate books of accounts in relation to business. Now, obviously every charitable trust has books of account, they are required to be audited, no issue over there. But nobody would maintain separate books of account for an activity which according to it is in any case not a business, but now revenue identifies as business. Take the very example. The very trust is having the whole activity which is having in one set of books of account. Revenue identifies, but selling of this book at a high price is a business. And you have not maintained departmental account in relation to profit that you would generate from sale of this book by identifying direct cost and allocating pro rata indirect cost, and therefore you have committed breach of obligation under 11.4a, and that's why you will lose the benefit of charity. Now, how do I today know what revenue is going to take it as a substantial gain? The law says I should not be selling goods or services which are even incidental to my business with an eye on profit so as to make substantial gain. Supreme Court accepts that there is no need to sell the goods at a loss. There is no need to sell even at cost. The trust can have cost plus little surplus, but it should not be substantial. Unless you define substantial by some parameter which is identifiable and which will not raise to dispute, this is going to be a perennial dispute between SSA and the revenue. SSA would say that, sir, A activity was incidental to my main activity. Revenue would say it was not. Assuming SSA crosses the first hurdle, it was incidental, revenue would say, but that activity was at a substantial profit. SSA would say, sir, it was not at a substantial profit. Where do you go? Who defines what is substantial? The third problem. Suppose the very goods are available in the market at rupees 1,000, and if the cost of the trust is only rupees 300, why should trust sell at rupees 330 when others are selling at 1,000 rupees, so long as the surplus of 700 is utilized for the purpose of trust? Supreme Court says no. You should not be selling at the market price because market price would be substantially higher than the cost. Now please recall judgment of Gujarat High Court in the case of Sabarmati Gaushala Trust, where a Gaushala was selling the semen of the bulls at market rate, and the argument of the revenue was that, sir, they are making lot of money. Gujarat High Court took a view, but then they are utilizing the surplus for the purpose of charitable activity, and which law says that the charitable institution should not get the maximum market price. That judgment was approved by the Supreme Court, SLP got dismissed, but now in view of this judgment, this appears to matter of some doubt. Let's go to the second example took by the Supreme Court. Supreme Court says, if you are running a low-cost hostel for the weaker society, and you are making available the facility of hostel to the students at cost with nominal markup, that is fine. But if the very hostel is now made available at a high price by giving additional facility, it will be business. Where do you draw the line? Third example taken by the Supreme Court. If you are renting marriage hall for low amount, it is not business. But if you are renting the very same marriage hall, duly air conditioned with additional facility at higher price, it is business. So what is business and what is not business becomes a matter of perception. And the moment it becomes a matter of perception, it becomes subjective. And the moment it becomes subjective, surely revenue would always take a view in its favor, and SSs will have to go on fighting from time to time. So the Supreme Court says, one, you cannot do business. Two, you are permitted to do business only if it is incidental to your activity. And third, you should not be doing it with profit in mind. Now let's look at some real life problem. We are aware that, let's say, blind school or deaf and dumb school of Ahmedabad, they make furniture of top class quality. Now, if the furniture that they make, if they sell in the market, let's say the cost at their hand is rupees 10,000 and market price is 15,000, and others in the market are selling similar furniture at rupees 15,000, why should they sell at 11,000 rupees? Because if they sell at 15,000 rupees, 50% markup is substantial markup. And if it is substantial markup, it is business. And if it is business, they lose the benefit of charity. But sir, they are using this 5,000 rupees, or if they are selling 100 pieces, 5 lakh of rupees for the purpose of upliftment, development of deaf and dumb people. Supreme Court, that's irrelevant. So long as they are engaged in business activity, they will lose the benefit of charity. So now, every trust will have to see how does it raise finance. If it is donations, etc., obviously issue does not arise. But if it is by way of transfer of some goods or services, it will have to be doubly cautious to ensure that it does not do it at a price which may be regarded as substantial profit. Again, I am saying substantial is a word which is incapable of any definition, much less a precise definition. Take the second situation. Somebody, in order to uplift the students of lower strata, says, let me run classes to educate them, train them for administrative exams. Cost of that such a class per student is rupees 20,000. Obviously, students can't afford to pay. So he says, I'll charge 5,000. How does he make up deficit? Donations apart. He says, I will run parallel classes in an affluent area of the society and charge rupees 35,000, 40,000 from the students who can afford to pay. So there are two classes run by the same institute, one at a highly subsidized rate, and in order to meet the cost of that subsidy, he charges higher price from those who can afford to pay. Overall, there may still be a loss or a marginal profit because surplus of the second category has gone to feed the deficit of the first category. But according to this judgment of Supreme Court, the second category is a business. And if second category is business, A, have separate books of account, which you may not be having. B, even if you have separate books of account, the moment you cross that 20% threshold, you are out. So if you want to run 5 classes in in an area where you need to subsidize, you cannot subsidize it by more than 20% from actual income, because the moment you have more than 20% of income which may be regarded as business, you lose the status of charity. Take a case of, we are all aware in Ahmedabad, ladies engage themselves, destitute women engage themselves in making papad, all kinds of snacks, sell them, make some money. Idea is not to enjoy the profit as we quote unquote enjoy. Idea is to give them gainful employment, to ensure that human dignity is maintained, to see that they are given reasonable compensation. But if they are selling papad at a price which is a market price, which is according to some assessing officer at substantial profit, benefit of charity is lost. Why? Because you are doing business. Seva, one of the great institutions of the city, Ila Bhatt's institution, Self-Employed Women's Association. They do all kinds of artisan work, top-class artisan work, which is being sold obviously at market rate. Why should they sell it at a lower price and make less money? Because the money that they make ultimately goes for the purpose of ensuring that the women lot is uplifted. But no, the moment you do that, it will be regarded as business. If I read the Supreme Court judgment as it is, you cannot have any substantial profit, meaning thereby you need to sell at a price which is just above the cost. How does that institution make capital expenditure? Yes, with selling at little more than the cost, it can ensure that it's maintained from time to time. But what about the capital cost? Suppose a new building is to be put up. A new library is required to be made. A new dispensary is required to be put up. How do you do that? That's not an issue which Supreme Court says we'll examine. You get donations, not by way of this level of activity. Therefore, the general, in general, Supreme Court said this: don't indulge in business. And if you indulge in business, it has to be incidental to your activity. That's why I said hostel can give food to the students, but not to third parties. And even if you do it, incidentally also if you do it, you cannot make money. So even if you give to your students, if the cost is rupees 30, you can't charge more than, let's say, 35. If you charge 50 rupees, you are again hit. And if you do it, it can't be more than 20% of your total revenue after 2015. In fact, prior to 2015, it was 10 lakh and 25 lakh. So large number of trusts which would be covered otherwise in the definition of charitable institutions would be hit by this particular exposition of law. Having said this generally, let me now go to the 6 categories which are examined by the Supreme Court and the principles laid therein and how are they likely to hit us. First, statutory corporation. They are all government corporations. The argument of the revenue was that, sir, they are all collecting fees, cess, consideration. For example, if I want to put up my building plan in an AUDA area, I need to pay fees to the AUDA. So similarly, there are fees that I need to pay for the purpose of getting all kinds of clearances, permission. I'm talking about official fees. So all those fees would be reflected in their books of account. Therefore, the revenue was saying very simple, sir, they are collecting cess and fees. Supreme Court says, in their case, cess and fees is not income. In case of private trust, cess and fees would be income. Why does it say so? It is like saying this, because I want to reach that destination, the reasoning. Supreme Court says, if we make cess, fees, consideration in the case of statutory corporation as part of business activity, they all will be required to pay tax. And if they are all required to pay tax, they are government corporation, burden will fall on everyone. So we need to exempt them. And because we need to exempt them, we will not treat in their case fees and cess or consideration as part of business income, so long as they are being recovered in accordance with the statutory framework guideline. But here also Supreme Court puts one flag. if the amount that is charged by a statutory corporation is significantly higher than the cost, then it will be business and it will have to be within that exception of 20%. Again, what is the meaning of the term significantly higher? 5%? No. 10%? No. 20%? Maybe. 25%? Where do you draw the line? Number one. Number two, by its very nature, it is possible that in a given case, you may be charging significantly higher. Why do I say so? Take a case of Gujarat Housing Board. Now, obviously, it has become defunct. But when it was actually working, there was low income group, middle income group, high income group. To the persons who are being allotted low income group house, what was charged was far below the actual cost. So how would you make up for the deficiency? You would sell houses under high income group at a significantly higher price. So the surplus of the high income group would go to meet the deficit of low income group. Now, if you look at high income group sell on a standalone basis, that is business. Therefore, the question would be, do you look at the activity of the trust holistically and thereby ignore surpluses in one stream which are meant to feed the deficits in another stream? Or do you look at the activities of the trust departmentally, and the moment you find that one department is selling goods or services at quote unquote significantly higher price, that's business. And if that's business, A, separate books of account, B, not to exceed 20%. This again is going to create a lot of confusion and chaos. Having said this, let me go to the second, because I want to emphasize on the third, which is more important. But let's go second. Statutory bodies and authorities, Institute of Chartered Accountants. The Institute of Chartered Accountants had lost in some years before Delhi High Court, had won for some years before Delhi High Court. The argument of the revenue was, look at the accounts of institute. Now that the president and vice presidents are not here, we can say that institute was making significant sum of money, surplus. The argument was that institute makes a lot of money, and therefore institute should be regarded as not eligible for the status of charitable institution. Supreme Court says, and rightly, that institute is set up under an act of parliament to regulate a profession. It is not an institute meant to make any money. It is meant for the purpose of ensuring the profession of chartered accountancy gives the best services to the society. So it is otherwise eligible for the benefit of a charitable institution. But, and this is but becomes important, if however consideration charged towards forms or fees is significantly higher than the cost including for admission or for examination, that part of consideration may become business. Now, consideration towards cost of issuing form, there will be no cost. Now cost would be available online. So if institute says we'll charge 100 rupees towards the form cost, would it be hit by this particular provision? I do not know. If for the purpose of admitting a chartered accountant to profession, rupees 5,000 is charged, it may be reasonable. If rupees 50,000 is charged, would it become quote unquote significantly higher? Higher than what? There is no parameter against which you are going to consider. But then higher than what revenue believes to be a reasonable price, then it will be business. So every year, and Supreme Court very clearly says at the end, every year in case of every charitable institution, every stream of income will be examined to find out what is business, what is not business, to find out whether it falls in 80-20 ratio. So now you need to be sure what might be business and what could be business, whether it will fall within that 20% or not. The second regulatory body was Seeds Certification Agency. Supreme Court says they are also entitled to the benefit of charity. The third was Trade promotion bodies, councils and association. And it is here that there are going to be again major issues. Before the Supreme Court was Apparel Export Promotion Council. Now Apparel Export Promotion Council, as its name suggests, was a council set up by Government of India for the purpose of ensuring that there is significant boost in the matter of export of the textile, apparels, etc. So for the purpose of ensuring ready-made export of garments most conveniently, the council also holds India International Garment Fair, where participants come, they take stall, they make available their products, and people come and do business. Their claim was that ultimately we are doing it in the larger public good. There is no reason as to why we should lose the benefit of charity. The court says, here is an association which holds workshops, training centers, stalls. It is for the purpose of development of trade, commerce or business. This leads to improve business activity, make them more efficient. These receipts are receipts which are in the nature of fees, and therefore, if they exceed 20%, you will lose the benefit of charity. Now, why this is very, very important? Take a case of Chartered Accountant Association of Ahmedabad. Branch is now covered by the Supreme Court judgment. Chartered Accountant Association of Ahmedabad. It holds seminars from time to time. Some of them are free. Some of them are free, but some of them are for a consideration. Obviously, it has to be for a consideration, because how do you otherwise meet with the cost? And what is the purpose of these seminars? Purpose of the seminar is to educate members so that they remain updated in their knowledge, so that they can meet the challenges of the time and they can improve their skills. This would be regarded as trade, commerce or business, or activity in relation to trade, commerce or business for cess or fee, which would mean you would lose the benefit of charity if that stream of activity exceeds 20%. So all trade associations, trade bodies, Bombay Chartered Accountant Association, Engineering Association, medical councils, which hold such kinds of educational activities also from time to time on paid basis, if it is found that it is at a substantially high price, you will lose the benefit of charity. Now, look at the irony. The board circular, when this provision was brought in, said we are not going to hit these trade associations. In that circular, it was expressly stated the trade bodies would not be hit. But Supreme Court has already said, we discussed, circulars don't bind the government. So that is going to be irrelevant. Therefore, should they now go for the status of mutual associations? Should they go for being taxed under section 44A? Should they remain charity? These are going to be the issues which every trade association will have to examine. Fourth category is non-statutory bodies. There were two kinds. One, ERNET and NICSI, which were essentially giving services in the field of internet. Supreme Court says they are entitled to benefit because they are not catering to only business. But there was a third entity, GS1. The function of GS1 was to give barcode. Now, if you want to export goods, you have to put barcode compulsorily on most of the products. So, in order to enable you to put barcode on your product, GS1 charges some amount. Court said this is helping the industry. And there was GS1, which is a government entity, may still be liable to pay tax because it will not be to the benefit of, it will be fees charged for the benefit of trade, commerce or business. This would mean chambers of commerce, trade associations, they all will be hit because they are all essentially rendering services to trade, commerce or business. So the judgment in this category significantly hits everyone who is dealing with trade, commerce or business. The fifth category, cricket association. Matter is sent back. I have no issue there. But one of the argument of before the Supreme Court was that, sir, cricket is an education. And if it's an education, it is not even required to be taken as a part of this group, because this group of matters only covers the residuary category. Supreme Court says, education means, and this definition of education might hit you otherwise. Education means only formal training and development of knowledge, skill and mind by students by formal schooling. So education does not mean equipping yourself with knowledge generally. It means only if you are having the formal knowledge. Finally, there was also a tribune trust before the Supreme Court. In the matter of tribune trust, the argument was that it is running a press and it is being run by a charitable institution. Court accepts, yes, running of a press is a charitable activity because it disseminates knowledge among the people. But because income by way of advertisement exceeds 20%, you will not get the benefit of charity. Ultimately, therefore, Supreme Court says this, which I said a little while ago. In case of every trust, examine on a year-to-year basis whether it is trading or not trading, or rendering services in relation to trade, commerce or business or not, and if it is, whether it is falling within the limit of 20%. If yes, permissible. If no, it is impermissible. I would not be surprised, therefore, in case of all major trusts, now scrutiny assessment will become on a year-to-year exercise. Because Supreme Court itself has said, merely because you are a charity or not a charity in 1 year because of activity of that year, you will not be entitled to claim status, or you will not be denied the status in subsequent years if the facts undergo a change. Before I close this judgment, there is a second part of the story, a short story. Revenue moved an application before the Supreme Court saying that, sir, you have dismissed all our appeals in relation to statutory corporations, etc., but you have given guidelines. So there is inconsistency. Once you have given guidelines, how can you dismiss the appeals? Therefore, restore the matters back to the department and permit us to do reassessment or assessment again of every entity for every year. Fortunately, Supreme Court said, we are not going to permit you. Those assesses who are before us, for them matter has attained finality. But those who are not before us will have to be scrutinized in light of this judgment on a year-to-year basis. So somebody might have succeeded and his case may be pending before the tribunal or High Court or even Supreme Court. In the light of this judgment, now that issue will have to be re-examined, meaning thereby a big Pandora's box is opened, and I would not know exactly where the matter ultimately stands. When this review application was being argued, the counsel for the department said that they are coming out with a board circular explaining this judgment so as to ensure that judgment is not being misused or is being used in the correct perspective. I have my doubt as to whether circular would be of a benevolent nature. I am sure that circular will pick up everything that the Supreme Court has said against the SSC in particular, and will lay down terms and conditions on which SSC may be getting the benefit, which will be very, very harsh terms and conditions. Only time will tell us as to how exactly this judgment pans out, but the judgment as it stands today is going to create serious issues in the matter of implementation of tax laws in the case of all charitable institutions. Having said this, let me in 5 minutes deal with the second judgment of New Noble Education Trust. In that case, the SSC had claimed exemption under section 1023C, being an educational institution. CIT had denied, High Court had denied, matter went to Supreme Court. Now the controversy before the Supreme Court were threefold. One, section 1023C uses the language that institution must be existing solely for educational purpose and not for the purpose of profit. So two things, solely for the purpose of educational purpose and not for the purpose of profit. Now, there were two earlier judgments of the Supreme Court, one in the case of American Hotel and another in the case of Queen's Education Society, where Supreme Court had taken a view that so long as predominant object is education, we don't need to look into all objects. SSC therefore said that my predominant object is education, therefore the question of my being solely existing for educational purpose may not be material. This is the judgment by 3 learned judges, therefore they say these two judgments are wrongly decided. 1023C requires exclusivity. It must be solely for the purpose of education. So your object clause must contain education, only education and nothing else. Truth, whole truth and nothing but the truth kind of a situation. Therefore, if your object clause contains anything above education, you will not be entitled to take the benefit of section 1023C. It also acknowledges, and this is, therefore we must keep this in mind, that section 2 clause 15 is wider than section 1023C. Because section 2 clause 15, subject to whatever problems that we saw, nonetheless does not require you to have only education. You can have education, you can have incidental objects also, which may be charitable in nature. So maybe now somebody may have to think as whether he should continue to be in the 1023C or should move to 215. The second issue before the Supreme Court was, while granting permission under 1023C, can commissioner look into over and above object clause actual activity also? The argument of the SSC was that 1023C at the stage of registration, commissioner may look into only my object clause and not the nature of activity. That may be subject matter of assessing officer to examine. Supreme Court says no. Even at the stage of registration, commissioner is entitled to look into over and above your object clause, nature of activity. And if it is found that in past you have earned money disproportionate, again a phrase used by the Supreme Court, disproportionate to your activity, then you would not be entitled to registration. The third issue. Now, in some of the states, in order to carry out charitable activity, you need registration as before an appropriate authority. For example, in the state of Gujarat, a charitable trust has to be registered with the charity commissioner. Question was, if you are not registered there, can you get registration under section 1023C? I would have thought 1023C must stand by itself. If I am satisfying condition under 1023C, I must get registration. Whether or not I am registered under the other appropriate statute is immaterial. But Supreme Court says no. If you are required to be registered as a charitable institution under another law, unless you are registered there, you will not get registration over here. Now, please mark, this part of the judgment may not ipso facto apply to section 215, because 215 uses the language charitable trust or institution. And therefore, if there is an institution which does not require registration anywhere else, for example, that issue was raised in the matter of Gujarat Maritime Board, which got confirmed right up to Supreme Court, the argument was GMB is not registered with the charity commissioner. The answer was it's a statutory corporation. It is not required to be registered anywhere. It got approved right up to Supreme Court. So maybe for 2 clause 15, this may not ipso facto apply, but for the purpose of 1023C, we'll have to be extra careful to see that this is appropriately dealt with. Therefore, to summarize, now I have got 2-3 minutes. To summarize, these two judgments are going to throw up serious issues. Undoubtedly, some parts of the judgment are good, but some parts of the judgment are little vague. If they are vague, they are capable of multiple interpretations. Revenue would undoubtedly take interpretation in its favor. Litigation is now faceless. It has now become timeless. And we do not know when a matter would get disposed of. SSs would certainly be put to a significant, avoidable prejudice because of some of the observations made by the Supreme Court, but ultimately this is the law of the land. We have to accept what is the law of the land. Therefore, the only thing that a charitable trust or institution can do is to arrange its affairs in a manner to ensure that it does not attract the disqualifications prescribed by any of these judgments. The Honorable President of the Institute said something about laughing, so let me close this, spending a couple of minutes with an anecdote. A lot of things that I have said might not be logical, but I was talking about law, and law is not logical. A professor of logic in his examination declared that a student has failed. So he gave him F, fail. Student went back to professor and said that, sir, I have to pass, please give me A. Professor says, you have failed, I can never give you A. The student went on requesting professor. Professor was very clear, he is not going to change F to anything. Student says, sir, let's do one thing. I ask a question to you. If you answer it correctly, I'll go home happy with F. But if you can't answer, and if I'm required to answer, you will change from F to A. Professor thought that he knows everything, so he said, fine, put a question. He said, sir, what is legal but not logical? Legal but not logical? What is logical but not legal? And what is neither legal nor logical? The professor started thinking. After some time he said, I can't answer, come tomorrow. Next day the student went back and said, sir, now do you have an answer? Professor said, no, I don't have an answer. You give me answer. He said, sir, first please change F to A. Professor reluctantly changed F to A. He said, now give me the answer. He said, sir, you are 60, your wife of 30, it's legal, but not logical. Your wife of 30 has sweet relationship with a student of 20. Logical, but not legal. And that student of 20 who had failed, you just gave him A, which is neither legal nor logical. Thank you very much.
Thank you, sir. It's always a pleasure listening to you. Now I'll request Treasurer Ahmedabad Branch C.S. Amit Chaudhary to kindly propose a heartiest vote of thanks.
Thank you, Nirav. And thanks to the committee over here for organizing such a beautiful event. Saurabh Soparkar, sir, our Ahmedabad branch is always fortunate to host budget session where you are guiding all the members. And I'm happy to say that same aura and atmosphere also created over here. And again, all the members have understood the technicality of the subject once again with you, your words of wisdom. Thank you, sir, once again. And the most important thing, sir, law is not logical. Thank you, sir.